Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for October 22nd, 2022. All right, before we start, as usual, you can read our disclaimer, pause the video. And as usual, we're going to go into the current market environment. We don't have any stocks in our portfolio at this point, but we may soon. And we're going to review the stocks on our watch and ready lists. So let's go ahead and start with the current market environment. So we just had a return to an uptrend on Friday, which was yesterday. We did get a follow-through day in the market, and on both the NASDAQ and S&P. Wasn't the strongest of follow-through days, but we'll take it. So we do have a confirmed uptrend, which is one of the pieces of the puzzle that we need to see to be able to turn our stock environment indicator, which is right here, from red to yellow and ideally green. We haven't seen green in a long time, not all this year. So, but that's the first step. So we don't have that. We have that first step in place, but we don't have anything else. So despite that, we're back in an uptrend. There's just not a lot of stocks setting up, and so there's just really no merchandise. If you've been following us for a while, we've been watching a number of stocks. Some of them have done okay. A few have broken out and held, especially recently, which is good. The fact that we didn't own them, it's no problem. You don't ever feel like you're missing out. That's one of the things that people get. They get FOMO. They see these big up days and they think, oh, I got to buy something. Well, you don't need to. There's always more stocks. And one of the reasons we watch stocks, even if we don't own them, we still keep an eye on them because we want to know how they're acting. Even if we don't own it, are the leaders that have already broken out, are they continuing higher? Are they topping out and just forming another base on top? Are they breaking down and coming back in and then breaking down completely? So we want to know this is like a litmus gauge, a litmus test for the market and a gauge of how it is under the surface. So if we've seen the leaders fall apart, then either there's rotation going on or the whole market just isn't working. And all we're really seeing in the indexes is just a few stocks holding it up, which is what we saw throughout 2021. So at this point, we just have that first pillar. We do have a confirmed uptrend. So now we're waiting for better action in stocks and a lot more setups. Without setups, there's really nothing to buy, and we're not ready to put our money to work. Okay. And the other thing too is that it's all that volatility we've seen for quite a long time. It's created a lot of sloppy looking charts, a lot of volatility, and we don't buy into volatility. We want the volatility to come, but we only want after we buy, but only on the upside. We don't want the downside volatility where we're now getting big swings that tend to stop you out. So we're looking for that sort of one-way direction volatility. And we don't see it right now, which is another reason why we don't have a lot of setups. It's just really just the charts are choppy and sloppy, and we're just sort of been forced to wait. But that's all right, But waiting has kept us out of a lot of trouble. I can tell you that for people that have just been trading this market, the vast majority of people are down huge. They have lost 50% of their money, 60% or more. If a lesser number have lost just between 25 and 50. Now, you don't want to be any of those people. And that's because they're not following any kind of system. They're not really understanding how the market works, and they're just going by hunches and feel, or they're just following the media, which following the media, you'll end up losing all your money because it just doesn't work. So, but we stick to a really specific and disciplined approach. And we're just down, I think we're down 9.75. Now, still, it's more than we'd like, but I think we had just a few stocks that really we were, larger invested, and they just sold off. But that's something that in a good market, very easily to come back and go at least positive, and then go, positive for the year, and then go into new equity highs. But we've avoided just a lot of trouble. We're really just, compared to the market, we've done very well, and that's just mostly by not trading at all. So again, patience is always necessary, especially in a bear market. You just have to, the idea really is not to be making money so much as just you're not trying to lose. And that's just keeping your eye on the market and just following what it does. If it's telling you that stocks are not working, you're just out. You trade less and less and less. Eventually, you're not trading at all because it's just everything you buy has been going down. The average trader does the opposite. They just say, oh, look, everything's on sale. Wow, I love this. I've been watching PayPal since it was 270 and it's, I don't know, 65 now. What a bargain. It can't go any lower. And they buy it and, they've been doing that all the way from 270 all the way down to where it is, today. So you can't do that. That's just, you lose all your capital. Okay, so let's go ahead and take a look at some stocks. Let's pull up the charts here. So we're going to start off, we actually don't have any ready list stocks. So that's another thing. We had a few, but they kind of broke out and they've gone a little bit too far past our buy zone. I can show you one here. I think it was Cardinal Health, one off. Yeah, so we were trying to buy things a little early in the base. This was a nice cup with handle, and it just took off. Even though it's showing here in this buy zone, we're trying to buy it a little earlier over here, so it went past our buy zone. I wouldn't buy it here. It's just a little too extended. But this is a great looking chart. I mean, it formed a cup here, and then it formed another cup with handle over here and broke out. So we're gonna watch these stocks. The whole health sector really took off on Thursday and Friday. So anyways, we'll see how this does. If it just breaks down like it had done over here, we don't want to be part of that. So anyways, we're going to continue to watch those stocks. But let's go ahead and go back to the few stocks that are on our watch list. Now these are the best of what's available. Now this one is it's a low average daily volume, so it's a little bit more on the risky side, but it's acting very, very well. We even have this RS line new high blue dot. The RS is 99 out of 99, so it doesn't get better than that. Very strong line heading up. And what this blue dot means is that the relative strength is making a new high while the stock is still in a base and not making new highs. So it's actually very bullish, and that just turned on Friday. So we were trying to buy it out of this lower part of the base. That's where our buy zone was. So we actually, since we weren't buying anything because the market was not really working, so we didn't buy it even though we were watching it and it was on the ready list. So it broke out. Now we actually have just moved our buy zone up here to this 29.61, and we'll see what it does. If it just screams straight through, we won't end up buying it. We wanted to see it just kind of pause up here near the highs at 29.60, 29.50, around there. Ideally, it pauses there and doesn't get very volatile. You can see like over here, look how tight this trading was over here on very, very low volume. That's what we love to see. But here is on a low, so that's not ideal. But when you get it up here near a high, it just means that the sellers are just not appearing. So you can see here, we got up to new highs, but we started seeing a really high volume, and that just ended up starting a decline down to the 50-day, which did get support, and then we came back up. So if we can get up near no old highs and not have sellers appear, it's a great sign. That means the path of least resistance generally is up, and then we would break out again and continue higher. So that's Bell Fuse. Yeah, its main drawback at this point is that it's a little extended now, so I wouldn't buy it here. So we're waiting, but it's a thin stock. It doesn't trade a lot, and you have to be a little careful of that, especially if you're putting on any larger size positions. Okay, next one is Travel Centers of America. This one's down in the industry group is 29 out of 197. That's pretty good. And you can just see here, we got a lot of volatility, but we are starting to see that volatility kind of contract, which is what we want to see. So you can see we kind of came up here, had a quick reversal, came up not as high, came down not as low. Actually, no, sorry. It looks like, let's see. Yeah, it did break below that. So, but now we're trying to tighten up over here and on low volume, which is good. So we're getting close to those highs. And we have a buy now to buy it right above this. Let's see, it's high there, 59. Yeah, we're actually right about here, 58. Oh, sorry, where's our 58.90? Yeah, so we're buying it just right above in this area here. So when we're getting it right about, sorry, let's see if I can get in there. Yeah, right about there. So we're clearing this resistance here of these of this area here. Now we do have a couple of spikes, but that's where we're trying to get it if it'll set up. Otherwise, we'll just have to wait. And if it just blasts through that, then we will just have to put it on the watch list again. Next one is Vertex. So you can see that sometimes these buys areas are just not very clear because of all this choppiness. I mean, Vertex has been a real strong leader for a long time. And you can see going back into December, January, look at this nice tight trading, just nice, a lot of up days in a row. And when it corrected, it really didn't do a lot. And the volume came down. And then look at this nice run here. This is what we love to see, because you just don't get shaken out. It just keeps going higher and higher. And here you can finally see maybe it got a little overextended. That maybe would have a place to have sold into when after a long run you get even a bigger run. If it had come down and formed a like an island top or just a big reversal, that would have been a sell signal too. But you can see then, starting when this is in May, we are now in the heart of the bear market, and you can see the S&P on this black line. You can see it just got a lot more choppy. It tried to break out. It came up here, new highs. It just couldn't do it. Came up, new highs. That started getting tighter trading here, and now we're drifting up to new highs again, which is a good sign. And we'll see now. The only drawback in this one too, we have earnings in just a few days and next week, so we probably won't be buying it because by Monday it'll just be a few days before. We'll see. Sometimes we do. We just take off some of the position if it really is acting well, or if it really just takes off, we'll hold into earnings. But we'll see. This is the problem with a lot of these charts. They're just really choppy, so they're all on our watch list. The next one, there's just a few more here, is Comfort Systems. They are a heating HVAC company, heating and ventilation, air conditioning services. Again, this one too, it's kind of starting to tighten up again. It's come up near its old highs, and we don't see a lot of selling coming in like we saw over here. So that's a really good sign. Annual earnings is looking pretty good, just continually growing slowly but surely. All the numbers are good here. We have 97 composite. The quarterly earnings are pretty strong all the way through. We get a little bit of acceleration here. So we had sales of up 17, then 22, then 32, then 43. We almost got it here on the earnings, but we had 7, then to 5, then 25, 30. So really, the company's doing really, really well in this environment. And again, but earnings are coming up next week too. So what's been happening recently is these stocks just tend to blast off right into earnings, which is, institutions or whoever, positioning themselves before the earnings. Super risky way to go, but that's what a lot of people do. Okay, let's go on to the next one. Next one is Double Verify. Yeah, and ticker is DV. And this one is a little bit of a early one. You can see it's not really in an established uptrend yet, but we have gotten above the 200-day, which is still declining. But we are above that, and we're now holding above it, and we're now starting to hug the 50-day, which is turning up. So if I go to a weekly, you can see, now this is not bad. I mean, some of these, if it had been up at 100 and then it dropped down to 20, we're talking a huge decline. That would be too much. But this was a more recent IPO, and we're off by 30%. It's still a lot, but it's acting pretty well considering it's a software company in this environment, and they're in the digital advertising realm. So it's actually pretty good. So we're trying to see if we can possibly get in early on this, but we're watching. And we do have a buy at 29.10. That's right above over here. So we'd be clearing all this except for this spike. but we'll see. In earnings are not for a while, so that's actually a good sign. So we do have now let's move on to the long-term outperformers. We do have a couple of stocks, which we haven't had in a while. The first is Cadence Design Systems. So super volatile. I mean, they made this big run here, and I don't know what that was all about, but it completely it was retraced. So a lot of volatility. So this one, though, we're trying to buy it at the 200. So let's take a look at some of the why we're looking at this stock. So the first one is this is the kind of chart we're looking for. Just nice up move. You know, this is actually pretty smooth, but it's gotten a little volatile, of course, because we're in a bear market. You can see, look how this is coming down, the S&P, and this has basically been holding, even tried to make a new high. And we're right at the 21-month moving average, which is good. It's given us support for quite a long time. In fact, it's never really closed below it, going all the way back to 2010, so about 12 years. So we're right at it, 156. That's giving us support. We like that. If we go to the weekly, we're right at the 40 week, which is the equivalent of the 200-day. And then we look at the daily chart. We're right at the 200-day, which is black line. So we're just under it. So our note is to buy in a break above the 200-day, which is all right where we are. So if we start getting a little bit more strength in this, then we'd be good buy. Unfortunately, we have earnings in 2 days, so that's going to basically be on Monday. So we'll see what happens. But it's right at a spot that we would be looking to buy, especially now that we're back in an uptrend. But unfortunately, the earnings are putting a little kink in the armor there. And then the next one and the last one is FICO. So let's go back. We'll go to the monthly. Again, not as strong. You can see here we had a very nice uptrend, good relative strength, but starting to peter out a little bit here. But it's because we've come down to this 40-month average, but it's getting support there. It's closed below it, you know, occasionally, and it's come back up. So we got some support there. And we're trying to buy in a move above this 40-month moving average. So if we go to the daily, so we're right about 420 to 430. So we're a little bit below right now. You can actually see here, this 21-day is actually right at it, even though it's, and then here, this is the weekly chart. That's actually not giving us a spot on the weekly. So that's what we're trying to do. We want to see a bounce off of this line and some strength. And so we have a little window there, 420 to 430. In terms of earnings and sales, I mean, it's pretty good. You can see we had a really big jump in 2021 in annual earnings. We jumped up from, we were just in the 4s, 5s, and then suddenly we jumped up to 13, and then 17, 18. So this is it's acting really pretty well. But looking at, you know, quarterly earnings and sales, I mean, the earnings are pretty good. The sales are a little on the weak side. Margins are pretty good. So it's looking pretty good. It's a little bit on the thinner side stock, only trades 189,000 shares a day, but it is a higher price stock, so that's considered more quality. So that is the last one we're looking at. So, you know, we're hoping that, again, as the market improves, we'll get more and more candidates that start popping up and giving us some good buy areas. Ideally, we'll have some just really crisp and clear buy spots for stocks. We haven't seen that in quite a while just because of all the volatility. But that's where we are. That's where we are for at this point. I'm sure next week we'll have some more fireworks one way or the other, and we'll be back with more charts and more data. Okay, thanks a lot. Bye-bye.